Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Prudential Financial, and let me tell you, someone made a pretty big slip of the tongue during their earnings call. It's like saying you meant to order a small coffee, but accidentally asked for the entire coffee plantation. Let's see what really happened. So this is a current report, also known as an 8K, filed with the Securities and Exchange Commission, or SEC. This report tells investors about important events that a company needs to share quickly. In this case, the date to keep in mind is May 1, 2020 needs to share quickly. In this case, the date to keep in mind is May 1, 2025, because that is when the event being reported actually happened. The heart of this report is about something called Regulation FD disclosure. Regulation FD, or fair disclosure, is a rule that says if a company shares important information with certain people, like analysts, they need to share that information with everyone else at the same time. This makes sure that everyone has a fair shot at knowing what's going on. Here is the juicy part. On May 1, 2025, Prudential Financial had a conference call to discuss their results for the first 3 months of the year. During the question and answer part, an Executive Vice President and Chief Financial Officer, Yanela Freyas, was talking about how the company might be affected by changes in interest rates. She was trying to say that if interest rates went down by 0.5%, the impact on the company's earnings per share, or EPS, would be about 20 cents. But instead she said 20%, talk about a big difference. 20% is a huge amount. Imagine saying your house costs $200,000 when you meant to say $200, quite the whoopsie. To clear things up, Prudential Financial is posting the full conversation from the conference call on their investor relations website. This way everyone can see exactly what was said and that the company quickly corrected the mistake. It's like posting the unedited version of a video after an embarrassing blooper. Here is something very important. The company also included a section about forward-looking statements. This is basically a warning that some of the things they say about the future might not actually happen. They use words like X, believes, and anticipates. It's their way of saying, hey, we're making predictions, but things could change. The report mentions that more information about risks and possible differences in results can be found in their annual reports on Form 10K and quarterly reports on Form 10K and quarterly reports on Form 10Q. These reports have even more details about everything that could affect the company. Basically, if you want to dig deep, those are the places to go. Now, what does all this mean for Prudential Financial? Well, on one hand, it's just a simple mistake during a conference call. People misspeak all the time. It's human nature. On the other hand, it shows how important it is for companies to be careful about what they say, especially when it comes to numbers. Investors rely on this information to make decisions, and a mistake like that can cause confusion and maybe even affect the company's stock price. If only temporarily. This also tells us something about how sensitive Prudential Financial might be to interest rate changes. Even though the CFO misspoke, the question was about how the company's earnings would react to a change in interest rates. For an insurance company that makes lots of long-term investments, interest rates are a really big deal. They impact everything from how much they earn on investments to how they price their insurance policies. In terms of direction, Prudential Financial seems to be handling this situation in a good way. They quickly corrected the mistake and are being open about it. However, this does highlight a risk that all financial companies face, which is communicating clearly and accurately about financial matters. The report was signed off by Brian P. Spitzer, Vice President and Assistant Secretary 2O. Overall, while this incident is a bit embarrassing, it doesn't seem to point to any big problems at Prudential Financial. It is a reminder that companies always need to be careful about the details and making sure they are communicating clearly with investors. This report is just a quick and honest way for the company to clear up any confusion and move forward. Thanks for watching this episode of Corporate Decoder. If you found this helpful, please like, subscribe, and let us know what other filings you would like us to decode.